What's up, everyone? As we've discussed in previous videos, investors played a huge role in inflating the housing market over the last 2 years and are now struggling a little bit on how to navigate the downturn in the housing market over the last 6 months. I mean, we've seen Redfin, Zillow, Opendoor, and other companies shut down their iBuying programs as investors scramble to offload all their properties before prices drop even more. But this isn't the whole story. There are still institutional investors like Blackstone that are waiting on the sidelines for opportunities to buy inventory at a discounted rate. Just recently, Homebuilder Lennar reported a slowdown in new home orders in its fourth quarter as the housing market stays in correction mode. And on December 9th, Bloomberg reported that Lennar Corp, one of the biggest home builders in the United States, is offering to sell thousands of homes to rental landlords when sales to everyday buyers has slumped. So today, we're going to take a look at that Bloomberg article titled, "Lennar Offers 5,000 Homes to Investors with Buyer Demand Sliding," as well as an article from Fortune that's titled, "Intensified Housing Market Correction Has Homebuilders Offering Sweetheart Deals to Wall Street." And we'll see what they're saying. This should be good, so let's just dive right in. Lambert writes in Fortune that homebuilders have a housing downturn playbook that's proven to be effective time and again. They start off by offering incentives like mortgage rate buy down. If that doesn't work, then the builders will start to mark down home prices. Fast forward to 2022, and home builders are trying to offload their inventory by selling to investors to rent out the homes rather than selling directly to buyers. This is called build to rent and has investors looking for deals while builders are trying to minimize their losses. Which brings us to Lennar, who's trying to sell approximately 5,000 properties, a potential value of roughly $2.5 billion to institutional investors. Many of the properties are located in the Southwest and Southeast, according to the Bloomberg article, with builder giving landlords the opportunity to buy entire subdivisions in some cases. What's an interesting dynamic with the institutional investors is a lot of them have been sitting on the sidelines waiting for that moment to strike. They're thinking, hey, I want to buy these homes from you, the builder, but I want to have a discount to do so. Ali Wolf, chief economist at Zonda, tells Fortune. Wolf knows that these institutional investors don't just want markdowns in the 10% ballpark, they want 20% or 30% price cuts. Wolf thinks that since mortgage rates have come down from their 7.3% peak in October, that she thinks some of these institutional investors may be willing to pull the trigger now. What we're hearing now is that some investors, because mortgage rates have come down, they're afraid that primary buyers are going to come back into the market. So some of the institutional buyers are trying to rush in now because they're afraid there will be a pop in demand from primary buyers and they're going to lose their opportunity, Wolf says. And Lennar isn't alone. Patrick Clark, the writer of the Bloomberg article, spoke to Jeff Klein, who's the executive director of SVN, which is a private commercial real estate investment firm dedicated to the build-for-rent asset class. Klein said that in recent months, builders have sought out bids from rental operators on at least 40,000 homes. Many of those properties had been under contract with individual buyers who just walked away from their purchase agreement. He also adds that builders are looking to sell one or more subdivisions at a time. The reason builders are going to investors is because of one of two reasons. The first is there's just been too many cancellations by buyers. In October, the home builder cancellation rate, i.e. the percentage of buyers that back out of their contracts, tracked by Johns Burns Real Estate Consulting, spiked to 26%. The second reason is just there's a surplus of inventory. Home builders still have a tremendous amount of inventory for both single family and multifamily in the pipeline. I mean, I can understand this. Between the pandemic housing boom, which pushed the number of U.S. housing units under construction to a new record high, and the cancellation rates spiking, builders are going to be eager to offload their inventory. It just bums me out that they're going to go to institutional investors. So which institutional investors are they talking about exactly? Well, Clark writes that single-family landlords have been eyeing building inventories for months, with some, like industry giants Invitation Homes Inc., seeking to raise new funds to pounce on opportunities once interest rates and prices come down. And Lambert writes that while companies like Blackstone have made it clear that they want to continue to grow their real estate portfolios, Blackstone-owned Partners of America, one of the nation's largest private landlords, announced in August that would halt buying single-family homes in 38 U.S. regional markets. Now, they did say they hope to resume purchasing homes in these markets, so if interest rates come down and prices come down, they may be a contender. And then there's Lennar. Lennar has also raised money to acquire rental houses, tapping Alliance Real Estate and Centerbridge Partners for $1.25 billion in equity commitments in 2021. But Lennar, which plans to spin off a subsidiary that owns and operates single-family rentals and apartment buildings, has been a cautious buyer. Lennar chairman Stuart Miller said on a September call with investors, "Contrary to what you may have thought, we're probably selling less to our own program and more to other SFR programs outside of Lennar." So I guess we'll see in the near future which one of these investors is going to start buying all these new builds. But I don't know about you guys, after going through these two articles, I see a lot of potential problems in regards to the housing markets. First one is that builders start offloading their inventory to these build-for-rent institutional investors rather than real buyers, then that inventory or lack of inventory for buyers will keep prices really high, because the less homes that are on the market, the more buyer demand will be for each individual home, so prices will not come down. We need more inventory on the market for prices to come down. And the second reason I see is that this will just give these institutional investors even more control over the rental market, which may make rental prices unsustainable. And ultimately, this all just exacerbates the affordability crisis. So I don't know about you guys, but this does not sound like good news to me. It's not unexpected, but I just don't think this sounds good for the future of the housing market. But what do you guys think? Definitely comment below. I think the one thing we can all agree on is that we have an affordability crisis in the housing market in our country right now. And by builders offloading their inventory to institutional investors, I just don't see that helping at all. But like I said, comment below, let us know what you think. I hope you got some value out of today's video. If you did get some value and you want to show our channel some support, definitely smash that like button, comment below, and subscribe to our channel. It just motivates us to make more videos. I really try to bring you guys the most up-to-date information, but if you want to see different videos on the housing market from different sources, definitely check out these next two. Thanks for watching. I do appreciate it. Bye!